Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Hey everyone, it's Ask Rob and Rob, the show where you give us your lovely questions in, normally property related, and we give you our answers back. It's a very simple concept, but we keep it simple because it works, because we've done over 400 of these now. And we make it very easy for you to get your questions in as well, which has probably helped that run.
Yeah, I think so. All you've got to do is go to propertyhub.net/ask. Really is as simple as that. From there, you can send us a written question if you want to see your name in the Sunday Times, or arguably even better, if you want to get your voice on the podcast itself, then you can leave us an audio message, which is what Mark has done.
Hi guys, love the podcast. I just wanted to get in touch as I found myself in a bit of a pickle with regards to a property that I used to live in that I now rent out. The property is on the outskirts of London and I now live in the Midlands with my wife. When I was considering renting the property, I didn't consider Section 24, which was my mistake. I just didn't realise it was in existence. So as we speak now, it's probably costing me in the region of about $5,000 a year to rent it out. I only moved out about 4 months ago. So I'm weighing up my options. One such option I was considering was to move the property into a limited company, but I understand that might attract capital gains tax, which would be like a $20,000 outlay, which isn't really an option for me. The other option I'm considering is selling that property and buying perhaps 2 or 3 properties with mortgages in the Midlands in order to rent out under a limited company. I just wanted to gauge your opinion really on any options that might be available to me that I haven't considered to get me out of this issue that I'm in. Selling the property would really be a last resort, as it's in a great location, nice area, 20 minutes from the centre of London on the train. I just wanted to get your opinion really, if there's anything you could recommend that I haven't considered. Thanks a lot. Take care. Bye.
Mark, thank you for your question. I say this so often on the podcast, but I love this show, the Ask Rob and Rob show, because there's always new questions, always new scenarios that pop up that I think obviously can help you when we answer it, but also help so many other people as well to think through these challenges. So, what should you do? It's a really tricky one because I can tell you really like this property, but you don't have an investment at the moment because this asset is losing you $5,000 a year. So the only way it can actually really become an asset is if the capital growth was going up at a rate of knots and it could subsidise that $5,000. Now, the London market and the Southeast hasn't been doing that for the last few years. So you might be lucky and you might have had that offset by the capital growth, but it's probably unlikely. Now, in the future, it could happen, but you never should go into an investment and go, okay, I'll take a hit to own this property. So basically cost money to own it because I believe the capital growth is going to go up. You should not do that. And I think if we looked at this a different way, if you were offered this property as an investment and you looked at those numbers, would you buy it? Even closely consider it? Almost certainly not. So if that's the case, what should you do? Well, you could say, if I move into a limited company and I can turn that loss into profit from a rent, maybe after a number of years, that cost outlay to move might be worthwhile. But while you've indicated a capital gains hit, you've not mentioned stamp duty, which on that type of price of property is probably going to be quite weighty as well. So that's probably not going to work. It's very, very rare that we'd suggest selling a property on the podcast. We often talk about holding for the long term. But in this case, Mark, I think it's one of those situations that at least it should be seriously considered. Because if you take that money from that property, so sell it, take the gains, and then reinvest it in other areas, you'll almost certainly do a lot better. And even if you have to take a capital gains tax hit to sell that property, you should be, when you reinvest, making a rental profit each year, so that'll be quickly wiped out. The other thing you have to your advantage is you have options. You can invest in so many different areas. The Midlands is a big place, as we all know. So you don't just have to invest on your doorstep in the Midlands. You can invest anywhere you like in the Midlands. And there's some really great, strong, fundamental hotspots out there in the Midlands that we like as a business and that we're actively targeting. And I'm sure you could take advantage of those areas as well. So, of course, on the podcast, we never tell you what to do, but I think the numbers suggest you should give serious consideration to selling up, reallocating those funds and making them work harder for you. Obviously, Mark, the choice is yours, and I wish you the best of luck with that choice.
Good luck, Mark. Let's move on to our next question from James.
Hi, Rob and Rob. James here from Bournemouth. Thank you for all the excellent content you've provided me with so far. I've recently received a deeded certificate for a leasehold flat that I own. The flat requires no remediation work regarding cladding or non-cladding issues. One of the questions asks whether I owned more than 2 additional homes before February 2022, including my main residence, making it a total of 3 properties. Like many investors, I do own more than 3 properties. After further research, it seems that my flat is now classified as a non-qualified lease, which will affect its resale value and mortgageability. Have you encountered this situation before? Am I understanding this correctly? And I imagine this is going to impact many other property owners. Thanks for listening to my question, and I look forward to hearing your answer. Bye.
James, thank you for your question. And this is a really confusing area because there's been so many developments and rumours and all sorts in the space, and it's spun off requirements for all this extra paperwork, which is what you're coming up against now. But the good news is I don't think this is anything that you need to worry about. Basically, this whole deed of certificate thing, the purpose of that is it establishes whether the property was owned by an investor or an owner-occupier as of a particular date in 2022. That date is the same for everyone. It's never going to change. That's the reference date. And the reason that that is significant is that if the property was owned by an owner-occupier on that date, then it qualifies for protection against certain remediation costs. And if it's owned by an investor, then it doesn't. But in your case, James, you've said that there is no remediation needed. There are no cladding issues. So the whole thing sounds like a total non-issue. If you come to sell the property in future, you'll probably be asked for this certificate, but it should not affect your ability to sell. It should not affect mortgageability, because all it's saying is that you don't have protection from something that isn't going to happen anyway. So obviously we can only go off the information that you've provided. If there's anything that we've missed or anything you're unsure about, then definitely take some advice from your solicitor. But for me, I'd say make sure that you keep hold of the paperwork and file it away and make sure it's something that you've got available when you come to sell, as you should do with all your paperwork, because one missing certificate can derail a sale. But in terms of the attractiveness of the property and the mortgageability in future, not an issue at all.
Well, there we have it. 2 more questions answered. Thank you so much for your questions. Thank you so much for listening. And remember, it's super easy to get your questions in, whether in the written form or via audio, propertyhub.net/ask. We'll be back on Thursday with the Property Podcast. We'll be in the Sunday Times smiling at you, answering some questions in the home section. And of course, we'll be back with Ask Rob and Rob, same time, same place next week. So until those wondrous events occur, take care, have fun, bye-bye.
Bye-bye.